For more on what's next for Disney, let's bring in Sean McNulty, contributor at The Ankler. Sean, welcome. Mr. Iger achieved at least one goal. I assume it was one of his goals, and that was to quiet the proxy fight of Mr. Peltz et al. But did Iger's moves add up to enough to right Disney and put some juice in the stock?
Yeah, I mean, it was up 5% last night. He said all the right things. Bob's a pro. He needed to say Nelson Peltz was not the ghost in the room, but he directly started the call saying Fox was a good deal. And that didn't say Nelson's name on the call, but it was that was in his opening 3 or 4 sentences of the call. And look, you have to cut costs. You don't need Nelson Peltz to tell you that. Bob Iger knew that already, but Nelson can come on CNBC this morning and say he listened to me and thank you so much, and I'll be on my way, which is what Bob had to do to get that done. The annual meeting is on April 3rd, so that is one thing off the list now. But Bob is a lot ahead. So
where are the cost cuts going to come from?
Marketing. That's $1.25 billion in marketing costs are the first order of business. And layoffs, as you reported, 7,000 layoffs. So labor and marketing are your two first main sources of cuts. $3 billion in content. There was no deadline put on that, and sports is excluded from that. So that could be the Hulu deal that they may not do. That could be cutbacks at 20th Century Fox Studios. He said general entertainment. So what is that not? Marvel, Star Wars, animation, Pixar. So you're talking, that could be ABC Network, that could be Freeform, that could be FX. So we're waiting on that, but you're going to see he said marketing cuts several times on that call. He clearly came in and said, you guys are spending way too much on marketing. You don't have to. That's $1.25 billion. And then the labor costs, I think, were $750 million, probably by end of fiscal year, which would be, the fall or certainly end of year, Tyler.
So you mentioned several of the properties, including Pixar and Marvel and a couple of others, that Star Wars, that seem to have gotten a pass on this round. Is that likely to persist, or could they ultimately be on under a scalpel's knife?
I mean, he said they're spending too much on those things, and you can interpret that as you may. Does that mean fewer series, or does that mean the budgets go down? Again, he wasn't clear on that. So it wasn't unscathed, but he said he focused on general entertainment as his first area and the main area of those $3 billion of content cuts. So, it's nothing's safe in 2023 in the media business, but you're not going to cut back on Star Wars. And Star Wars, quite frankly, he has to get that going again. There are no Star Wars movies in the pipeline right now. So that's priority number one. Avengers already has a 5-year plan. I doubt he's going to cut that back. So I don't think there's too many cost savings to get from those franchises, maybe a little bit in animation, things like that. But there's not a lot you can cut because he's a franchise guy. He's not going to look there for the main cuts to start.
Yeah, he kind of said it's general entertainment where he doesn't want to sort of compete. And what do you think is the significance of breaking off ESPN into its own unit? Laura Martin last hour suggested that maybe he would look for a co-investor down the line, raise some cash. Maybe that co-investor could be a league itself or another media company. What are your thoughts?
Yeah, he just said he didn't want to sell it. He didn't say he didn't want another investor. So you're exactly right, Kelly. He's very vague about it. It's not going to be a separate line until later this year. Maybe not until fiscal year Q4 in the fall. So a little bit more on that. It's also to recognize how important sports is at the company. And if you're looking at the future of broadcast, what is everybody saying? News and sports. So maybe he's planting a flag saying sports is a pillar of the Disney company going forward, much like, say, Netflix said gaming is a third pillar of their company. So it could be prepping for, what's the future of entertainment? It's not in broadcast TV. It's not in cable TV. Sports will survive that. And he wants to maybe give that, its due course in an earnings report in the company.
It's interesting when you make a move like he is proposing here, which is to sort of separate ESPN as its own business, it makes that business more conspicuous, doesn't it? And potentially in a good way and potentially not in a good way, and if you were living at ESPN. But one of the things he didn't say in terms of cost cuts was he didn't talk about cost cuts at ESPN for rights fees or other things.
Yeah, I mean, a lot of that, the deals are done. He can't go back on it. The only deal out there is the NBA. And as he said on the call, the NBA is very, very important to ESPN. Is it the same deal they have now? Maybe not. Warner Brothers Discovery is having the same kind of issue in that they're also cutting back, but the NBA is going to want to double their fees. So, but the NBA also doesn't want to go to streaming directly. They need that wide audience of an ABC and of the still potent, cable networks at ESPN for viewership. So, that's going to be the thing to watch is the NBA deal. But everything else he can't touch sport. The deals are done. So there's not much to cut because there's not much you can do about it.
There's a lot going on in the NBA today. Trade deadline, 3 o'clock. Sean McNulty, thanks a lot, my friend.
Good to see you.
All righty.